Welcome to our 148th weekly webcast. Now, the way this weekly call works is I first discuss important and interesting business news topics from the past week and how we can all use the news and other strategies to enhance our careers or to make us much better investors. Then what I'll do is I'll spend the rest of the 3-hour call taking your questions, and I'll give away my $999 MBA degree product to one person on this call. I'll explain how you can win this very, very soon. Now, if you're getting value out of this weekly call, then please like, share, and subscribe. Okay, let's move on to the news and topics to help you take your career or investment portfolio to the next level. The United States government announced a plan to tax cryptocurrencies, and this is actually very positive for crypto investors. And here's why, and here's exactly what this signals. So the biggest fear from some cryptocurrency investors is that most governments may make cryptocurrencies illegal because they view cryptocurrencies as the biggest threat to national security ever. Why is this the case? Because if you and I hypothetically use cryptocurrencies and not dollars or fiat currency, then what would happen is countries would literally go bankrupt. Now, when countries want to build roads or spend money on the military to protect themselves, the way they do this is they issue bonds. So let's do a quick case study. Let's assume that I'm the US government. Okay, and so I, as the US government, I don't make enough money from taxes to build bridges and other government projects. Therefore, I have to raise money from you, the investors. So how do I raise money? Well, the way it works is I get a loan from the public. Let's use a real example from World War II. Okay, so this here is, give me 1 second so I got some in my eye. Sorry about that. Okay. All right. Let me jump back a second there. So how do I raise money? So I get a loan from you, the public. And we're going to use a real example from World War II. So this here is a bond. Okay. The year is 1944. And I, the US government, I'm very worried that our country might be invaded and our freedom might be taken away. And I, as the government, I don't have enough money to build tanks. So what I do is I sell you this government bond from 1944. And quick little side note here, but eBay is amazing for props. And when you present at work or at school, what you can do is you can buy props on eBay, they're cheap, and then sell them back after the presentation is done. And people will remember what you brought. Because when you think back to show and tell when you're kids presenting at school, we don't remember what people talked about or the teacher. We do remember what people brought in, though, the props. Okay, back on track. So I'm the US government in this example, and I sell you this bond, okay? I give you this bond, and then what I do is I take your money, okay? This is fake money here. Okay, so you give me your money, and in return, I give you this bond here. Now, some of this fake money here, I'll use to build tanks. Okay, so that's gone. I've spent it to build tanks. And some of the other money, what I'll do is I'll take it out of circulation. It's gone. Okay, and we know that if the supply of anything goes down, like semiconductors, then what happens is the price goes up. Okay, same thing with baseball cards here. If the supply of baseball cards or any particular baseball cards is quite low, then the price goes up as well. It's just basic supply and demand. And this, by the way, if you're curious, I'm such a nerd. This here is a replica of the T206. It's a baseball card from like 100 years ago. If it was real, it'd be worth like $5 million. It's fake. And the reason, I got to go off track again here. Sorry, a little useless information, but interesting. The reason they used to put baseball cards in cigarette packs, the cigarette companies created baseball cards, is because when you bought cigarette packs, they didn't want the baseball cards to bend. Okay, interesting trivia. All right, so again, I'm the US government. I take some of the money out of circulation. And when I do that, the price of money goes up, meaning interest rates increase. And this we know is called monetary policy, which is the policy of money, hence the name. Now, what we're going to do is let's fast forward to the year 2050. And let's pretend that nobody wants US dollars anymore, and that everybody uses cryptocurrencies instead in the year 2050. Well, if this happened, and it's a stretch, but I want to humbly make a point, but if this happened, if everybody used cryptocurrencies in 2050 and not paper or fiat currency, then countries would literally go bankrupt. So the fact that the US government recognizes cryptocurrencies and taxes them, given their recent announcement, instead of banning them, this is actually a huge positive, okay? As it signals that they won't be banned. And there are some crypto investors that thought or think that most governments will ban them in the long run. Now, I know it's a stretch of an argument, but from a market signaling perspective, it actually validates the long-term investment thesis in cryptocurrencies from the largest economy in the world. And separately, as much as I love certain cryptocurrencies, I think many of them are scams. And as a crypto teacher, I've had so many of my students come to me telling me that they've lost thousands of dollars from crypto scammers. So imagine a world where most of the stocks on the stock market, on the S&P 500, were scams, and that most people that invested in stocks on the S&P 500 lost their money because of scams. Well, that is exactly what happened in America in 1929 when the stock market crashed and caused the Great Depression. And it was actually much, much worse in 1929 than it was in 2008 or 2001 or early 2020 during the peak of the COVID crisis. So in 1934, and this makes sense with respect to cryptos, I'll get there in a second, but in 1934, as a result of a crisis of confidence in the stock market, the government created the Securities and Exchange Division, which protects us from people trying to scam us with stocks. Now, the Securities Exchange Division makes it law that if you want to go public with an IPO, or if you want to raise money to list on the stock market, then you have to give investors a legal document like this one here, outlining the risks, like this one here for Facebook. Facebook, by law, had to issue this in 2012 before they went public. And this is to protect investors because by law, and these are written by lawyers and investment bankers, all the major risks of a company and the risk of you losing your money are documented in this S1 filing that you can access at sec.gov. Now, when a crisis occurs, then many governments create some regulation to protect investors. Otherwise, what happens is you don't have an economy. So many people are now getting scammed with cryptocurrencies that there's got to be some sort of protection. And I've fought very hard for my students who've lost lots of money to crypto scammers. And I've even called government officials, but they can't do anything about it as there isn't even a tiny bit of regulation. Now, I'm a very big fan of smaller governments. But if we had some loose, but not too much, if we had some loose regulation on cryptos, then it would result in a decrease in the number of scams. And government regulation of investment markets usually takes place after investors lose a fortune, like in 1929 or in 2001. In 2001, Regulation Fair Disclosure was created so that hedge funds cannot have more access to information than us retail investors. Or regulation was created post-2008 when banks were deemed too big to fail. A crisis is starting to slowly emerge now, with people getting scammed with cryptocurrencies. And so a tiny bit of government regulation might make sense, which of course is better than outlawing cryptos altogether. And that might explain, get some water here, that might explain why you've seen a bunch of cryptos hit an all-time high in the past couple of days. All right. Let's see what we got next here. Oh yeah, this one's fun. TikTok is the #1 most downloaded app this year. So how much do people make on TikTok? Well, a couple people make over $1 million each, including Charlie D'Amelio, Josh Richards, and Michael Lee as well. Now, making money on TikTok is not simply based on the number of views or subscribers. A lot of it is actually based on sponsorships by large companies. Now, the amount of money you make is actually based on views, and it works like this. For every 1,000 views you get on a TikTok video, you might make 2 to 3 pennies. So if we assume you create a TikTok video that gets 1 million views, right? That's hard, but it gets 1 million views. That means you only make $20. So if you make a TikTok video with 1 billion views, that means you make $20,000. And the way it works is once you have 10 to 20,000 subscribers, you can make a few $100s for just mentioning a brand in your TikTok video. Hard to make a living off of just making unsponsored TikTok videos though. In fact, for most TikTok content creators, you don't make any money using advertisements like you do on YouTube. Now, if you have a massive following on TikTok, you can make $100,000 per post with sponsorships, which is really rare right now. So what I want to do is I want to see how much your favorite TikTokers make per post. So give me 1 second here. I'm going to go over here, make myself a bit smaller. Okay, cool. All right, so what we're going to do is we're going to search together for TikTok calculator. So that's TikTok, I always spell it wrong, calculator. All right, then you click here on TikTok money calculator, and then you can scroll down and enter in the name of your favorite TikToker. So let me enter in just Charlie D'Amelio. Charlie D'Amelio. Hope I spelled that right. I think I did. And I'll hit enter. Here we go. There you go. So you can see how much money she makes. Now, she makes about $100,000 on average. Now, my absolute favorite, my absolute favorite TikToker is this guy right here. Hold on. This guy right here. He's hysterical. His name is Kabai Lame, and he lives actually in Italy. The guy's hysterical. So other ways that people make money on TikTok is through gifting from viewers. The problem is, though, TikTok keeps 50% of those gifts. And TikTokers also sell merchandise and other products, many times through cross-selling to their Shopify stores, actually. And a lot of celebrities, like Will Smith and others, they'll mention their TikTok videos on their social media channels, their other channels. And they'll cross-sell their content, similar to what my favorite YouTuber, Marquise Brownlee, does on Twitter when he promotes his YouTube channel there. So the bottom line is that it's really, really hard to make a living just on TikTok, but it makes sense to use Gary Vaynerchuk's strategy of repurposing content to create content once and then chop it up and post the micro content onto other social media platforms because it's a land grab. And I think that in a decade, we're going to look back and say, I wish I had posted more content on YouTube, and I wish I'd repurposed that content elsewhere, because YouTube is the only gold rush in history that costs you nothing to make the product. And it's also the only gold rush in history where you can get immediate access to billions of potential customers for free. This guy cracks me up so much. All right, give me a second to get some water. All right. What do we got next here? Oh, yeah. Quite often in business, the actions of a company signals what their interpretation is of proprietary data. For example, Google and Facebook are requiring all employees to get vaccinated, and CNN recently fired 4 employees for showing up to work unvaccinated. And Twitter and Amazon, actually, they've delayed the dates when employees can all come back to work. Now, all 5 of the aforementioned companies have access to a lot of data, and they use algorithms to interpret the data. And professors will say that without data, a thesis is just an opinion and nothing more. So let's look together at the data that Google sees. All right, so let me go here, and we'll go together to Chrome. Okay, and what we'll do is we'll search for how to use Google data for COVID research. How to use Google data for COVID research. Okay, here we go. All right, and what we'll do is we'll click here, and then I'll scroll down to find out more in the portal here. Okay, cool. All right, so we see here on the left side, we see here that the number of COVID cases in the United States, and I'll drill down to different regions in a second, the number of COVID cases is starting to spike again. You see right here? And what we care about is the derivative, or the rate of change. Earlier this year, the rate of change was actually negative, which was very, very encouraging, of course. But what we see now is the opposite, as the number of cases is about to spike to an all-time high, okay, in the United States. And over here, this was April of 2020. Then we had a massive spike around the end of this last year, and it's spiking again here. Now, to be objective and intellectually honest, right here on the right side are the number of deaths, okay? And it's certainly not as bad as it was before. But we don't know about the impact of mutations of COVID. And we can also drill down by state up here and by county to understand why companies are reacting the way they are based on the data that they see. So CNN, for example, CNN is based in Atlanta, in Fulton County. So let's go check out the data there for CNN. So we'll select Georgia, actually. Let me get there. Georgia, the state, not the country. And then we'll go down to Fulton County. And this might explain why CNN reacted the way they did, which I thought was a bit harsh. Okay, so right here you can see that it's also spiking and getting closer to an all-time high in where Atlanta is. Now, this is just some of the data that you can access using Google Cloud and Google Data products. But my concern is actually that COVID, my concern is that Google and other tech companies, they see a much more severe trend on the impact of Delta, Lambda, and other mutations based on the data that we have access to. All right, 1 second here. Cool. Grab a little bit of coffee this time. Oh, this is a great one. Yeah. All right. Do you ever notice how chefs don't feel like they have a job? Instead, they have a passion because they love what they do. And nobody ever becomes a chef because they want to make a lot of money. They do it because they love it. They love nourishing other people and serving other people. And it's a form of art. And I want to talk a little bit today about the movie Ratatouille. But I don't want to just focus on the movie. I want to focus more so on the guy that actually influenced that movie to be created. Now, this guy here, his nose is almost as big as mine. Yeah. Now, Ratatouille is an incredibly inspirational movie, as we all know, about a rat of all animals that becomes a great chef in Paris, of all places. And this is where I proposed to my wife, in Paris. I took the menu. I was insecure she was going to say no, so we had to go to Paris for it. Yeah. But the genesis and inspiration, actually, of the movie Ratatouille was from a restaurant in the Napa Valley called French Laundry. Now, French Laundry, according to food critics, is the #1 restaurant in the world. And the chef and owner of French Laundry is a guy named Thomas Keller. And here he is right here in the kitchen at French Laundry. Now, French Laundry is about an hour and a half north of where I live here in California. Now, Thomas became very successful for a couple of reasons. The first reason is he always had awesome mentors. And he asked over and over and over again for great mentors all the time. And we have to all understand that people want to help us. all we need to do is ask whenever we want mentors. Number 2, he's always had an incredibly positive attitude. And one thing he said at a recent interview at Stanford Business School is that he actually started out washing dishes, and he actually loved it. And he had a positive attitude about it because he thought about the fact that what he is doing is serving an important purpose, which is having clean dishes, obviously, for people to eat off of. And he actually created an organized system and a better way of cleaning dishes. Now, most people, they think that cleaning dishes is way beneath them. But he actually learned a lot from it. And for me personally, I remember when I first started working at Accenture in the consulting sector. And they made me photocopy all day and all night when I first started there for 6 weeks. And this was just after I finished my undergraduate degree up in Canada. And I thought, my goodness, I went to school for this. And then what I did was I changed my attitude because perception becomes reality. And what I did was I started reading the stuff I was photocopying, and I started learning a lot. Now let's get back here to Thomas Keller. So he was a dishwasher in restaurants. And then he opened up a restaurant in New York City that went belly up. It went bankrupt in the late 1980s. Now, of course, it was really, really hard for him. But we know that you only have to be right in business one time. And given his positive attitude, he opened another restaurant in New York City. And then tragedy occurred. It actually burned down. And this, of course, devastated him. So he left New York and he moved west to start over. And just remember that Michael Jordan said, got my favorite prop ever here. He said, I failed over and over again in my career, and that's why I succeed. Now, Thomas Keller, he moved west to California, to Napa Valley here on the West Coast, and he started French Laundry. And I'll tell you a little bit about French Laundry. It's a fascinating place. And again, the genesis and influence for the movie Ratatouille was French Laundry. Now, to dine at French Laundry, you need to book many, many months in advance. And I've never eaten there, and I probably never will, because it costs $350 a minimum per person, and that doesn't even include drinks. But you get an awesome meal. Now, it's a 9-course set meal with no single food ingredient repeated in each of those 9 courses. And everything at French Laundry is organic, and they grow all their stuff as well across the street. You can see French Laundry in the top left there, sort of top middle, and across the streets, all the organic stuff that they grow. Also, the kitchen scenes in Ratatouille were actually modeled perfectly after French Laundry, which is fascinating. Let me show you that. All right, so this, you can see the background there is French Laundry's kitchen, and right here is a Ratatouille scene. So it's quite similar. Now, Thomas Keller realized his weaknesses. He realized them, as he stated that he's not good at other things like bookkeeping or finance. And he learned early on to outsource that stuff and just focus on what he's passionate about doing, which is cooking. And we actually have to realize what our shortcomings are. I have many of them. And once we realize our shortcomings, then we need to outsource the stuff we're not good at, if we can, or the stuff we're not passionate about. Now, the problem with many first-time entrepreneurs is they start off working at a big company, and they make that company a ton of money doing skill X. So what they do is they quit to start their own company doing skill X. But they don't realize how many distractions there are when you're running your own business, including accounting, customer support, human resources, etc. So I think if we want to start our own business, we have to outsource more or partner with people that are very good at what they do at stuff we're not very good at. And it's a cliche, but failing to plan is actually planning to fail. And most people that start a business don't write a business plan first. And it's actually devastating if you don't write a business plan, as this can destroy your net worth, of course, starting a company. It can destroy your health. It can destroy your reputation. And most importantly, it can destroy your relationships with your loved ones. So we should never quit our jobs and start a company unless we've written a thorough business plan. And this is something that Thomas learned as well. Remember, his first restaurant went belly up. Now, in my MBA degree program, there's a venture capital boot camp in the third of 4 semesters. And in this venture capital boot camp, I humbly help many of my students write a business plan and launch their companies without using much or any of their own money. And for more details on my MBA degree program, which has a 30-day money-back guarantee, please visit HarounEducation.com. The last thing I'll say on the topic of chefs and entrepreneurs is that there was this epic scene. I'm just getting shivers thinking about it. There was this epic scene in Ratatouille where you had this really tough food critic in that French restaurant. And the second he ate a little bit of that Ratatouille food in the movie here, he had all these wonderful experiences and memories come back to him from when he was a child growing up and his mom cooked for him the meal. And that scene actually in that movie was so appealing to emotions. And I think that appealing to emotions really works well in business, not just when it comes to marketing, but also when it comes to all types of products and branding as well. And so the bottom line is, in order to be successful as an entrepreneur, we have to write a thorough business plan. We also need to think with our hearts first, because you can't put your dent in the universe unless you're passionate about serving others and enhancing the lives of others. It gives us a sense of purpose. We also need to be cool with failing, as you only need to be right in business one time. And lastly, we need to realize our weaknesses and outsource tasks that we're not good at or we're not passionate about. And when it comes to your career, I want you to please follow your heart and do what you're most passionate about. And don't chase the money. Just do what you love doing and don't be afraid to fail a few times. And I promise you, if you have that attitude, I promise you, the money will eventually follow. It always does if we are persistent and we never give up. Now, since almost the day that my 3 sons here were born, they're a bit older now. Since almost the day my 3 sons here were born, I've asked them 2 questions over and over and over again that they immediately answer. I say to them, "You never?" And immediately they say, "Give up." And then I say to them, "You always finish?" And they immediately say, "What you started." So what I want you to do, please, is I want you to stop watching me. And I want you to do a search on YouTube for Ratatouille flashback scene. All right, give me 1 second. We're going to do a quick case study on probably the smartest acquisition that's occurred in the tech sector in the past 30 years. All right. Let's talk about Apple and their buy versus build corporate M&A strategy. Now, Apple released their first wireless earphones at the end of 2016, and this is going to blow you away. They now have 60% of the global wireless earphone market in 5 years. It's amazing, eh? And Apple's AirPod revenue is now way bigger than all of AMD, and it's almost larger than all the revenue from NVIDIA. And it's definitely larger, the revenue, than all the revenue from Spotify, Twitter, and Adobe, which is unbelievable for a company that's basically 5 years old. And at the pace that AirPods is growing at right now, in a couple of years, AirPods could generate more revenue than all of Netflix. Now, if we take a look here at NVIDIA, its market cap is close to $500 billion. And AirPods generates almost more revenue than NVIDIA. They'll pass them soon. So should Apple's AirPods division be worth $500 billion? Now, of course, to make this a fair comparison, we really need to do more work to understand NVIDIA's profit margins versus AirPods' profit margins. But since a lot of the technology in AirPods is from Beats, this actually makes Apple's purchase of Beats for only $3 billion. The smartest acquisition Apple has ever done, and potentially the best technology acquisition since Microsoft bought MS-DOS way back in the 1980s. And buying versus building made a ton of sense for Apple because Apple's AirPod revenue is already 4 times larger than what they paid for Beats. And I'm smiling because my son wanted Beats so badly for Christmas. So what I did was I actually gave him this. That's Beats by Dre. Sorry. No more Daddy Rich, I promise you. Okay. But let's talk about the supply chain. So Apple's wireless earphone products are now based on Apple's H1 processor that you can see here. And gone are the days when Apple relies on Intel, right? Intel or AMD for chips. And so Apple is actually phasing out Intel right now with their own M1 chip in their computers. And Apple actually makes their own SoCs. And SoC stands for System on a Chip. So this image we see right here is the H series System on a Chip, or SoC. And it's inside their earphone products. Now, if you're curious about the M1 System on a Chip that Apple owns, it actually looks like this here. And it has the CPU and the GPU for graphics on it as well. And the M1 is a huge deal, as it's Apple's way of telling Intel they're not needed anymore and that Intel's chips are too slow. The bottom line is, Apple's buying versus building strategy when it comes to Beats was a brilliantly executed deal from a corporate strategy and go-to-market perspective. Now, just one more thing I want to show you. In previous vlogs, I showed you how to do investment research and build financial models using SEC.gov. Now, my friends in the hedge fund industry all use this product I'm going to show you in a second, called bamsec.com. And I'll show you why it's actually better than using SEC.gov. So let me go there quickly and we'll look at Apple in a second here. All right, so let's go over here to bamsec.com. Now, the cost for BAMSEC, and I'll tell you what they do in a second, the cost is actually $29 a month, okay, every month. Or you can get it for free with a free trial every month with a different email address every month. I'm just kidding. Sort of, maybe. I don't know. Am I? Yeah, no, I'm kidding. Now, I did research on this AirPods vlog actually using BAMSEC here. So let's go there together. Okay, so let's go here to their homepage. And we'll type in the ticker for Apple. Here we go. Okay, great. So what I did was I looked through the 10K here, okay, which is the annual report. And I searched for AirPods, and I got access to a lot of statistics here for AirPods as well, a bunch of tables. Now, the reason why Wall Street loves BAMSEC is because you can download all the financials very quickly in Excel format. So if I click here, I can, if I pay for this, or if I have a free subscription, which I don't right now, but you can download all the data quickly into Microsoft Excel. And when you do this process here on SEC.gov, the data formatting is disastrous. So check out BAMSEC if you want to save time building financial models. And maybe the SEC should buy BAMSEC instead of building their own product, similar to how Apple bought Beats. All right, let me get back to big mode Chris, and I will figure out a way to do all this stuff faster. We're getting better here. It's fun. All right, give me 1 second. Grab a little bit of water. And I'm still on my mission to try to finish this entire thing every single day. Yeah. I have so much more energy when I do it. Okay. All right, moving on. As my 3 kids and many of us head back to school or work for the first time in 1.5 years given COVID, it actually has me thinking that if the internet was invented first, would we still have physical schools and offices? And years ago, I actually saw a panel of experts talking about the impact of the internet on newspapers. And in the audience was Warren Buffett. And he raised his hand to ask a question. And everybody stopped talking, like, oh my gosh, the Sage of Omaha has a question. And his question was this. He said, if the internet was invented first, would we still have newspapers? Of course not. So I do think that we need physical offices and physical schools, but I think we should actually spend half of the work week at school or offices, and the other half of the work week learning or working from home. And COVID has taught us that in many industries, we can accomplish more at home. Plus, imagine how much money schools and companies and all of us would save. Also, it's much better for the environment not to drive to work or school every single day of the week. And yesterday I had this wonderful meeting in San Francisco, close to where I live. And it was the first time I drove into San Francisco since 2019. And I was stuck in traffic. And I thought to myself, what a waste of time and petrol as well. And I think that big cities are going to go into secular decline because we don't need to spend 5 days a week in a big city working or going to school there. And I think that government spending on infrastructure is smart when the economy needs it. However, instead of spending massive stimulus, creating these massive stimulus packages to build more roads, why don't we just save that money and give tax breaks to companies and schools that decide to have their employees or students work or learn from home for 2 or 3 days of the work week? And this way you save the environment, you save money, and we all have more time to exercise. And most importantly, we have more time to mentor our children so they stay on the right path. Now, as a country and as a global society and as investors, it always makes sense for us to spend what is left after saving instead of saving what is left after spending. And so the bottom line is that yes, I do believe that stimulus spending is a good thing in dire economic times. However, the bigger picture is that giving tax incentives for companies to let employees work from home more often and letting students study from home more often will have a much bigger impact on the environment, parenting, health, and so much more in the very long run. All right, I think this is our last one here, and I'll start taking questions. This one's a little bit out there. It's different. All right. If you can't enjoy a cup of coffee, then you can't enjoy a Lamborghini. And Joseph Brotherton once said, "My riches consist not in the extent of my possessions, but in the fewness of my wants." The only time you should look into your neighbor's bowl is to make sure that they have enough. You don't look in your neighbor's bowl to see if you have more than them or as much as them. And I read an incredibly prophetic article in the New York Times a couple years ago that had a massive impact on me. And it stated that many wealthy people that live in first world countries are very unhappy compared to those that have nothing. And I actually felt that the meaning of this, isn't it a beautiful picture? I actually felt that the meaning of this article when a couple years ago, a university sent me to Mumbai to give a couple of business educational presentations. Now, there's a lot of wealthy people in Mumbai, but there are also a lot of people living in the slums. And we drove through the slums, and I had this sense of peace and calmness in my heart as I saw how happy they all were, yet they had nothing. And Jackie French Kohler once said, "There are 2 ways to be rich. One is by acquiring much, and the other is by desiring little." And I used to work on Wall Street, and everybody was so miserable around bonus season because what they did was they compared themselves to those that made more. How crazy is that? And to be fair, I'm guilty of that too, to be intellectually honest. And this is a very big problem in Western society. We always want more. I mean, how much can we eat? And I read the Dalai Lama's book called The Art of Happiness. And y'all got to read it. It's great. And he suggests that we compare ourselves to those that have less. And in that book, he had this incredibly prophetic quote, which is this: "Many sacrifice their health, their entire lives, in order to make money. Then at the end of their lives, they sacrifice all their money in order to maintain their health. And then they look back on their lives and they realize they never really lived. All your wealth can't buy you health." And I saw a quote recently that by the time your child is 12 years old, you've already spent 90% of the time that you will ever spend with him or her. you'll never get that time back. And it doesn't matter how much money you have. Orrin Woodward once said, sadly, when a person's possessions distract him from his purpose, he usually ends up losing both. And so today's exercise is, please don't think about wanting anything except for what you already have. And I want you to write down, please, I want you to write down what are at least 3 major material things that you won't focus on wanting to have today and in the foreseeable future. Take a screen print if you want, or pause me. And before I get out of bed every morning, actually, what I do is I thank God for 10 things as follows. Andrew, Matthew, Dylan, those are my kids. Christine, mom, dad, Jamie, Kate, Elizabeth, brother and sisters, and you, my students. So the other exercise today is gratitude. For the other exercise, what I want you to do, please, is I want you to write down what are at least 10 non-material things that you already have in your life that you are incredibly grateful for. All you need is what you have. So please take these exercises seriously if you can. I promise you that practicing gratitude daily will put you in a peak mental state. All right. It's time for questions. I hope you enjoyed that. All right, so let me go over here to Q&A, and you all know how it works. You type your questions in the YouTube chat, and I answer the questions in the order in which I receive them. Okay. And if I miss your question, just paste it again, as I do have senior moments. Give me a second. I'll put my shoes on because I stand here all day, and it's hard to stand in without having shoes on. All right. Let's do this, folks. This will be fun. Let me clean up my desk a bit. When I used to work at Goldman, my boss would tell me a clean desk is a happy desk. She was right. Yeah. All right. Here we go. All right. First up, I've got Satyendar. Satyendar Ravi wrote here, good evening, Chris. Oh, you posted this last night. That's right. Thank you. Good evening, Chris. I'm stuck between how to differentiate between personal experience and working experience while doing my resume. I'm volunteering currently in a charitable organization. Thank you. Yeah. If the personal experience is something you're passionate about, I say it's a wonderful thing. You know, most people, it takes them decades to realize what their passion is. But when you create a resume, and I teach this in my MBA degree program, and all about how to do an updated LinkedIn profile in a lot of detail. But when you create your resume, it's got to have 3 sections. Okay, the first section is either work or education. Okay, if you have a lot of experience, you lead with work. If you don't have any experience, you lead with education. So work, education, and then personal/other. And so all the personal stuff I would throw in that bucket. Now, one of the most important things about a resume is the very bottom line, where you write down your interests. Okay, like baseball, football, whatever it is. And it's crucial because a lot of times you go to interviews and the first thing the interviewer does is to mix it up. They look at the bottom, and if you have something in common with them, then they'll love talking about that sort of thing. And before you go to an interview or any meeting in business for the rest of your life, what I want you to do, please, is go to the Twitter profile of the person you're going to meet with and find out what they follow. So for me, I follow the best baseball team in history, the Toronto Blue Jays, who always beat the New York Yankees. And you'll see on my Twitter profile, I follow the Jays. And so if you showed up to a meeting and talked about baseball with me, you know, we definitely bond. We bond anyway, but I think you get the idea. Okay. All right, next up, Andre wrote here, greetings everyone. Hey, my question is, what are 6 things potential investors should look for when investing in a startup? Sure. And I have a venture capital boot camp in my MBA degree program, and we cover about 1,000 items. But 6 important ones I can think of off the top of my head are as follows. Number 1, the quality of the management team. Okay. Always start with the management team because, you know, ideas are commodities, but execution is not. And sophisticated investors invest in great people first and decent business models second. Okay, first one's the management team. Second thing I'd mention, okay, and these other 5 are not in any particular order, but the second of 6 things I'd mention is the size of the total addressable market, the TAM. because you never want to start a company in a tiny market. Because if you get 70% market share, which is hard to do, of a tiny market, it doesn't really move the needle. The next thing after the TAM to focus on, and you'll notice I'm buying time by using transition words, moving on to the third thing to focus on putting on your business plan presentation to investors, is you want to show a picture of the product or service. You want to visualize it. And a lot of people do this actually on the front cover of their 10-page presentation. And I say this because if the investor doesn't understand the product or service right away, and I love looking at images, it's easier than reading text. If the investor doesn't understand it immediately, then they'll pass on the investment, or they'll just politely listen and then decline you later. So that's the third thing. In terms of the fourth thing to tell investors is you want to talk about the problem of the market, okay? And then after that, you talk about the solution, number 5, how your product or service makes that, solves the problem. And the sixth and final thing to mention, I'm thinking here, these are transition words. This is what I do when I interview as well. I use transition words and I teach my students this. The sixth and final thing I look at when thinking about investing in a startup is I look closely at the financials. Okay, now in your 10-page PowerPoint presentation or keynote presentation, whatever, you do have to mention financials, but you keep it brief. You mention revenue and revenue growth expectations next couple of years, and then maybe EBITDA as well. So I hope that answered your question. All right, next up I got James, and my brother's name is James. James is saying, good morning, Chris. Good morning. Hope your week is well, likewise. And then James, oh, okay, you just said good morning. How are you? Good to see you. All right, next up I've got Cassandra. How are you? Cassandra is from Canada. She is awesome. And she's taken my MBA program as well. So Cassandra wrote here, hey, Chris, can you tell me what is the difference between an analysis from the equity side versus analysis from the credit side, bond side? I'm having trouble determining the fair value of a bond. Yeah. So when it comes to an analysis to value a stock, and stock means equity because equity means ownership. I have equity in something. When it comes to the analysis of a stock, use various multiples, which I teach in detail in my MBA program. If the company is profitable, you might use price to earnings. You might use price to revenue if the company is not profitable. And you might also look at discounted cash flow analysis. And the reason people look at discounted cash flow is because it values the company based on future cash flows a company's going to make, which is discounted back until today. And then what you do is you take the blended average of all three, or your favorite 3 valuation methodologies to come up with a target price. And the reason I recommend using 3 is because you're going to be wrong somewhere. I'm always wrong on one of my analysis. And if you take an average target price of all 3, you minimize the margin of error. When it comes to bonds or fixed income products, it's a lot more simple. Okay, there's basically 2 things you look at. Okay, number 1 is you look at the interest rate of the bond. Okay, and that will help you understand if the bond should trade at a premium or a discount. And it all depends on whether the bond is fixed or variable. When you buy U.S. federal bonds, like treasuries, they're all actually, for the most part, fixed. That's why they call it fixed income, right? The interest rate doesn't change. But sometimes when you buy municipal bonds, or they call munis, the interest rate is variable, and you've got to monitor interest rates closely. Munis are risky. You can lose all your money in a muni as well. And so you look at the interest rate closely. You also look at the ratings agencies like Moody's, Fitch, S&P, and what they have to say about the bond. And I only invest in bonds for the most part that are A-rated or above. And the way it works in bonds is as follows. Okay, the bond starts out, the best a bond can be rated at is AAA, then AA, then A, and then triple B, double B, etc. And anything below A is very risky and is called a junk bond, or high yield is the politically correct term people use these days. And so quite often you'll see a bond with an amazing return, right? But you got to look at to see if it's got below an A rating. Okay, because it can be very dangerous. And little side note here, but the way that they created Las Vegas, and Las Vegas it's a little nutty, but as y'all know, there's a gazillion hotels in the middle of a desert. The way they built Las Vegas was they funded it using junk bonds. because it's really risky to invest in Las Vegas. Now, Cassandra, hopefully that answers your question. If you have any additional questions or follow-up based on that, please ask me. You can ask me here live every week or in the MBA program as well. Thank you. Good to see you. All right. Next here, Samir said, good morning, Chris. Looking forward to this week's webcast. Thank you. It's great to have you. I'm trying to get centered here. Here we go. Good. Okay. All right. Shihan is saying, hey, Chris, I hope all is well. Likewise. I would like to know, what is your opinion on the Corporate Finance Institute's Financial Modeling and Valuation Analyst certificate? Yeah. I'm actually not that familiar with them. Probably my favorite and the most respected finance designation you can get. It's not an MBA. It's a CFA, which stands for Certified Financial Analyst. And it's 3 exams you write over 3 years. And then you become a CFA charter holder. And Wall Street respects this a lot more than any other finance designation. Okay, next up we have Anurag, who wrote, Dear Chris, good to see you, likewise. What factors determines a stock price in the short and long term? Yeah, so in the short term, as long as it's not during earnings season, but in the short term, it's quite often based on variables outside of the control of the company, right? It could be due to geopolitical data or healthcare data from COVID. Or any sort of economic statistic like unemployment rates, etc. Or the stock could actually move up and down based on how other stocks in that sector move as well. And the market's very volatile right now, and a lot of people are becoming day traders, which I don't suggest doing. But what's driving stocks now, a lot of it comes down to technical analysis as well. If a stock is oversold or overbought, you can go to HarounEducation.com. At the top, search for technical analysis. I have plenty of videos on this if you're interested in learning more about that. In the long run, which is the way I like to invest because you're not fooled by randomness, but in the long run, stocks are usually based on an earnings or cash flow multiple. Okay. All right, next up, Shihan wrote, thank you, Chris, for all the encouragement. My pleasure. Thank you. I wrote my first LinkedIn article, and it really feels great once I've written it. Hopefully, it's the start of many. Good for you. That's awesome. That's awesome. And what I recommend is, everybody write articles when you first get started with social media. Write an article once a week in LinkedIn. And then after 2 years of doing that, you've got just over 100 articles that you can throw together in a book. And you can always use, you can always use my book template, which is at HarounEducation.com/ all lowercase, write book, all one word. And it's 16 by 9. It's how I've written all my books. It's free. And imagine showing up to an interview or a sales meeting, bringing that as well. Yeah. All right, nobody does that. All right. And then Ajay wrote here, I purchased my first USA investment from India. Cool. It's the ARK FinTech ETF. I also purchased Shopify, great Canadian tech company. Represent, thank you. I'm Canadian. And currently it's only 5% of my portfolio. Should I increase my investment in global markets? Yeah, I recommend being globally diversified, and I'll show you exactly how to do it. So the best website to go to in order to find out about ETFs to invest in is called etfdb.com. That's etfdatabase.com. So let's go there together. And what you can do is you can screen by sector, by issuer, and by geography. So I'm just going to do a random quick search here. I'm going to pick a random country. So if I want to invest in Mexico, there are 333 ETFs in Mexico. And so when you look at these ETFs, you got to do 2 things. Number 1, look at the expense ratio. You want to make sure it's less than 0.5% per year. So the expense ratio to invest in the FLMX Franklin Mexico ETF is 0.19%. That means for every dollar you have in it, or every $100 you have in it, you'll pay 19 cents per year in fees, which is nothing. Then you want to look at the holdings to make sure that they're quite diversified as well and in liquid positions. So if we click here and we go to holdings, we see that we got Movil, Grupo Financiero, Walmart, etc. Okay, so it's well diversified. And What I also recommend doing, and let's remember this ticker now. I'm going to go to Yahoo Finance with you. Okay. So I also recommend looking at the average daily volume, okay, and make sure that the stock trades 10 times more in value every day than the amount you want to invest, just in case you want to get out. Okay. Because illiquid stocks own us in a down market. So what we do is we go here to Yahoo Finance, and this works for all stocks in India and every country actually. And we go over to summary and we scroll down. Okay. This one here is not very, I wouldn't invest in this one. The volume is 250 shares per day. Alexa, what's 250 times 24.68?
250 times 24.68 is 6,170.
Okay, so if I want to invest 10% of that amount, like $600, maybe I'd look at it. But I love looking at things that are much more liquid. So for example, if we look at the S&P 500 ETF, you'll see here that it trades like water. It's very liquid, right? So the average daily trading volume is 63 million shares, and it's currently at $440. So if you take the average volume times the price, we know that whatever amount we invest is going to be well under 10% of the average daily trading volume. And so when it comes to diversification, what you can do is you can look at various ETFs to invest in, or if you want to, what you can do is sign up for my MBA degree program at this address right here, where I teach you diversification when it comes to stocks, bonds, commodities, real estate, cryptocurrencies, etc. And usually I don't like to have ever more than 5% of my net worth, liquid net worth, in any one stock. Yeah, if it's a crypto, way smaller as well, which I talk about when it comes to portfolio management in my MBA degree program. Okay. Okay, next up, Anurag wrote, Chris, financial modeling methods used in your courses like price to book, price to revenue, and DCF. Are these standard ones used by investment banks and hedge funds? Yeah. So I would say, well, a big one is missing there, which is price to earnings. Yeah. So when an investment banker does an IPO and they create all the documentations for investors to look at an IPO, this is the IPO S1 filing for Facebook from 2012. What they do is the investment bankers work with a department at the investment banks called Equity Capital Markets. And Equity Capital Markets, or ECM, they stand on the Chinese wall in between the trading floor of the investment bank and the investment bankers. Okay, and the investment bankers cannot talk to the traders, right, for proprietary reasons with the IPO. And what Equity Capital Markets does is they teach the traders and salespeople on the trading floor how to value the company so that they can pick up the phone and talk to investors and tell them what the company is worth. And the valuation methodologies that are most often used are as follows. Discounted cash flow, which basically takes all the cash flow you think the company can make in the long run and discounts it to today, hence the name discounted cash flow. They also look at price to revenue, especially if the company is not profitable. Okay, and then they look at price to earnings as well. And if there's no earnings, what they'll do is they'll look at price to EBITDA. So hopefully that's helpful. Yeah. Now, when it comes to hedge funds, they're a little bit different from investment bankers and a little bit different from mutual funds. Okay, a lot of hedge funds are short-term focused, and so they'll take into account the shorter-term and medium-term growth rates. Okay, and they look at what's called the PEG ratio, which means this: the price-earnings ratio divided by the earnings growth. And the way it works is as follows. If the S&P 500, okay, the collection of 500 stocks that make up the American economy, the S&P 500 historically trades at about 15 times earnings. Okay, that's a P of 15. And the average S&P 500 stock grows historically at close to 15%. So you've got a P of 15 divided by 15%, which means a PEG, or price to earnings to growth ratio, of 1. Now, if a stock is trading at a PEG of 2, a lot of hedge funds will short it, maybe. And so what that means is as follows. If a company has earnings that are growing at 10% per year, and the company's PE is 20 times, that means the company is trading at 20 divided by 10, a PEG of 2. It's too expensive. And usually if a PEG is closer to 1 or well below 1, as long as there's no material issues with the fundamentals of the company, a lot of hedge funds will go long. Hopefully I answered your question. If it doesn't, please let me know. Price to book is mainly used for value investors. If you see that a company is worth more dead than alive, meaning if you break it up and sell off the assets, it's worth more, then that means a price to book ratio of under 1. And value investors like Warren Buffett will look at price to book closely. Yeah. My favorite one is price to earnings. I love valuing companies based on my earnings estimates in my financial models 5, 10, or 15 years out. Okay, next up, Ali. Hey, Ali. Ali wrote, hi, Chris. How can I pre-order the complete options course? Thanks. No, I appreciate that. Thank you. So it's coming out soon. If you want to help me, actually, I'm looking to get feedback from my students. And so I have a bunch of students beta testing it right now. I want to make sure it's ready for everybody by the time I release it this fall. So what you can do is, if you want, and if you have options experience, I can email you some of the tools I've used, the Excel spreadsheets, to value options. And you email support at harounventures.com. And what I'm doing, and I'm going to make it easy to understand. And humbly, I got the top grade in my class at Columbia in MBA school in my option course, but I didn't really get it. And the way it's taught it's just boring. It's all formulas and stuff, and it's theoretical. So I'm trying to reinvent the way options are being taught. I've got a ton of props for it. I teach you how to value options based on the binomial pricing theorem, as well as Monte Carlo simulation, as well as Black-Scholes. Okay, and then what I do is I teach you how to take the blended price, average target price of all 3 methodologies. Okay, and I make it fun as well. Yeah. All right. Next up, Ali wrote, Chris, how can you explain to a 10-year-old what an ETF really is? And how is an ETF different from an index like the S&P 500 index? Yeah. So an ETF is basically a collection of stocks that mirrors an index. So there's 500 stocks in the United States that represent the U.S. economy. And a company called Standard & Poor's puts together that list of those 500 stocks. And that's called the S&P 500. And if we want to look at the components of the S&P 500, I'll show you how to do it really quickly. And I'll get to ETF in a second. So if we go to finance.yahoo.com, and then we type here SPY. Okay. So inside the and I'll talk about ETFs in a second. Inside the S&P 500, here's what you have. So the top 10 companies are as follows. 6% of it is Apple. You've also got Microsoft at 5.6%, yada, yada, yada. It's very tech heavy because the U.S. economy's biggest sector is technology. In fact, if you look at the 10 biggest sectors in the S&P 500 on a weighting basis, we see technology is by far the largest at 24%. And so this company, S&P, Standard & Poor's, they create this index of 500 stocks. And every now and then, they'll realize, hey, one of these companies is not really representative of the U.S. economy anymore, but this one is. So here's this company, Tesla, and this is true. Tesla, ticker TSLA. The S&P added it to the S&P 500 not that long ago. And when they did that, Tesla stock went up a lot because there's a lot of firms, what they do is they create ETFs. And an ETF basically is a collection of stocks that usually represent an index. And so the ETF for the S&P 500 is a ticker you can buy. The ticker is SPY. As you can see here, it's an ETF. And this gives you exposure to all 500 stocks in the S&P 500. And to learn more about other ETFs, go to ETFDB, that's etfdatabase.com. And there's thousands listed there, yeah. All right. All right, next up, Anurag wrote, Dear Chris, the markets in India are on a bull run because stocks, and hence because stocks are expensive, someone with a long-term horizon, would you recommend buying stocks now or waiting? Yeah, I personally love to be a contrarian. You know, as Warren Buffett said, you got to be greedy when others are fearful and fearful when others are greedy. And a really dangerous thing that's occurring more readily these days in the markets is FOMO, which stands for fear of missing out. And if you let your emotions take control of you and you buy stocks, what happens is you end up just being a tourist and you're renting stocks and you sell them at the worst time. You got to be long-term focused. And so I love to buy stocks when everybody in the world is panicking. And my go-to index to monitor closely, and this is something I'll talk about in my options course coming out soon, the go-to index I use is the VIX. And I won't go into this too much detail because I talked about this before. But when the VIX spikes to an all-time high, there's no exception to this rule. It's always the best time to buy, okay? Because it measures expected volatility in the S&P 500, and volatility means fear. And so the VIX was at an all-time high. You can't see it intraday here. Back in March and April of 2020. And the VIX was launched in 1990 by the CBOE, which I'll talk about in my options course in more detail. Okay. Yeah. But my favorite investment strategy is to buy broken stocks, but not broken companies. What does that mean? Well, I love to buy stocks where it feels like you're catching a falling knife. And it's scary because nobody else is. And if you think about it, if you buy the same stock that everybody on the planet loves and owns, there aren't that many new or incremental investors to buy it and push it higher. So you always want to buy when people are panicking. Yeah. And the same thing in business in general. We always have to keep our emotions aside. You know, Dale Carnegie, he said that we have to understand in business that quite often people are creatures of emotion and not creatures of logic. So we just got to keep our emotions at check. And I've worked for a lot of billionaires in the investment world, hedge funds over the years. I won't name which ones, but a couple of them I think have Asperger's syndrome, meaning they're very, very unemotional. And that's one of the reasons they're very good at what they do is because they're unemotional. You just got to let everybody else panic, but not you. Yeah. All right, next up, Samir wrote, Chris, what do you think of lump sum versus monthly contributions and dollar cost averaging investing? Does one apply more than the other between individual stocks and ETFs in any case with long-term focus? Yeah. So I always believe that you need to save before spending instead of spending what is left after saving. Okay, save before spending. And the best way to save before spending, if you have the luxury of it, is make sure that your money is out of sight, out of mind. And what I mean by that is every paycheck you get from your employer, if you have the flexibility, immediately before the money hits your bank account, have money deducted and put directly into your favorite ETFs, okay? Or put it in cash in your retirement account and then move that money. So I recommend that. And then that's kind of a form of dollar cost averaging as well, if you have the money automatically invested in a group of ETFs. And you can automatically set this up as well. Okay. And Steve wrote here, hey, Chris, hey, everyone. Thank you for the amazing and great tips every Thursday. My pleasure, and thank you for being here. Please, what are the top 3 things to focus on as a new entrepreneur in order to be successful? Thank you. Yeah, the first thing is similar to what I was talking about with Ratatouille when I was talking about chefs earlier today. It's failing to plan is planning to fail. You got to write a business plan. You have to write a thorough business plan. So that's number 1 of 3, and that basically encompasses everything. Okay. The second thing to keep in mind is that if you work at a big company and you do skill X and you make that company a lot of money, and you think to yourself, I'm going to quit and start my company and do skill X and make more money. You have to understand and always think about the infrastructure that big company you worked at provides you with. You know, operations, HR, accounting, etc. And can you outsource that stuff when you start your company? And I teach my MBA students in a lot of detail, you know, how to start their own company with 0 money down. We always raise money from other investors or other people, unless we have a lot ourselves. And I do that in the 3rd of 4 semesters in the MBA program, in what's called the Venture Capital Boot Camp. Yeah. The last thing I'll say, number 3, is just understand that relationships are more important than product knowledge. Your network is your net worth, and you're gonna have to network like crazy to raise money, which I teach how to do in a lot of detail in my MBA program. And whenever a bunch of people tell you how much money they're going to invest and they commit to it, cut it in half, because people usually bail at the last minute. And make sure you have a lawyer create all your documentation, register your company, and never ever take a penny from any investors ever without having a lawyer write up legal documentation first. And I say that because I care. And I say it with love in my heart. I want to protect you and your family. Yeah. And if you need access to a cheap lawyer, and you all know I'm not sponsored, I never will be, you can always go to LegalZoom.com. Yeah. Okay. Give me 1 second here. Okay. Reza is saying good morning. I went to McGill with a guy named Reza. Reza Satchu is his name, yeah. And his brother Asif Satchu, who sold his startup for $1 billion to Ariba back in 1999. Nice guy. Okay, next up, Ting Ho wrote, thanks, Chris, for your crypto course. It's very informative and resourceful. Thank you. I appreciate that. And my wonderful staff, they helped me update the course as well. We just updated. Thank you. Okay. And then Samir said, I would subscribe more to this channel if I could. Thank you. I appreciate it. Appreciate it. And I get comments every now and then. People say, why don't you have that many viewers? I don't understand. Your content's half decent. I will never take any corporate sponsors ever. I want to focus on you, the student, as the customer. The second I deviate and take sponsorships is when I don't put you first. For example, if you go to any video game website and you're reading about reviews on video games, and you're like, dude, I don't get it. Why do they always say great things about Halo? Well, it's because Microsoft's a big advertiser there. That's all I'll say. I don't want to deviate from my core competency and my purpose and passion, which is serving you, my students, my customers. Thanks. Lucas says hello. How are you, man? Okay, Hui is saying, hi, Chris. Great to see you. Thank you. I just finished semester 1 of your Silver MBA program. It has been a wonderful experience for me so far. I enjoy the content and the way you present them. Thank you. God bless you. I appreciate that. And what he's referring to is the on-demand version of my program, which you can start today. You can go to this web address here. Yeah. Thank you. I appreciate it. And there's a 30-day 100% money-back guarantee. Thanks. Thank you. I appreciate that. Okay. And then Hui wrote, what are the pros and cons of listing yourself and your startup on Crunchbase? Yeah. So Crunchbase is where some people go to view details about a private company, okay, or venture capital firms. I don't really focus on it. I never really have. I think it's something you can really focus on if you want to get a good brand name out there for yourself in your portfolio companies. Yeah. I'd rather focus on my profile on LinkedIn. Yeah, it's more trafficked. Yeah. All right. Plus, you get a lot of phone calls from people trying to sell stuff to you. All right, and then Hui wrote, is there a better startup database than Crunchbase? I don't really know of them. Actually, yeah, there is. All you have to do is go to the top 10 or 15 venture capital firms' websites on the planet and look at their portfolio companies. I'll show you really quickly. And I partner with a lot of these companies. I'm going to show you. All right, let me go here. So the first one we'll go to is Sequoia, okay, and their website is sequoiacap.com. And I was I partnered with them. I was on a board of a company called Cohesi for a while until I quit to do my own thing here. And so and here's you'll see actually they profile the founders more so than the companies, because we know that ideas are commodities, but execution is not. But if you go here to companies, you can see their portfolio companies, the dent makers. That's smart. And so you can look by partner, by sector, whatever it is, right? And so, for example, here's one of their companies, 23andMe, which they invested in years ago. You can click it to learn more about the company. You can learn about the partner at Sequoia that sits on that board, that sort of thing. Another great one to look at is A16Z, which is Andreessen Horowitz. The reason it's A16Z is because between the letter A and Z, or Z as we say in Canada, there's 16 letters. And so you can go, and they're all pretty similar. You go to portfolio companies here, and you can look at the portfolio companies, early stage, late stage, ones that they've had exits, where they've actually sold their company. Oh, interesting. They invested in a firm which was bought by Squarespace, or by Square recently. Yeah. So that's what I would do. Just check out the top 10 or so. Yeah. All right. Give me 1 second. Okay. All right. Here we go. Good. Cool. All right. And I want to put this on the bottom here. All right. Next up, Manas, how are you? Manas is one of my wonderful students from India. He's written a number of books, including one called Bonds versus Business, which I have in the other room over here. He's very inspirational. So Manas wrote, "Good morning, my dear mentor." Good morning, you're my mentor, please. Hope all is well. Likewise. Just a weird news to start with. The CEO of Pfizer hasn't been vaccinated yet. Wow. Is it concerning fact for general people? I'm surprised about that. Huh. Unless he has, I think he's from Greece originally, yeah. Unless he has some kind of disease that would not work with a vaccine. You know, I have a handful of students that when they've taken the vaccine, there's been awful side effects given other medication they take. Yeah, but I'd be surprised that's the case unless it's for personal reasons. But the crazy thing about the vaccine, and I got it as well, is that it's still not FDA approved. It's kind of crazy. Yeah. All right. Next up, Hui wrote, "What can be done to remedy the failure of startups in their first few years of business?" Yeah. So if the startup has not yet written a business plan, they should write one right away. Another thing is try to raise as much money as you can when you can, because it's the most distracting thing, trying to raise money. And the model of funds trying to raise money every year from different venture capital firms is flawed, because raising money can take up most of your time, right? And you won't have any time to focus on skill X, which is the crux of your business. Yeah. Raise as much money as you can when you can. Yeah. And also understand that you're going to have multiple WIFIO moments in the first couple of years of your startup. It's normal. And WIFIO is a term coined by a former Andreessen Horowitz general partner, good guy, we were on a board together, named Scott Weiss. And he was one of the early employees at Hotmail as well. Scott Weiss said every company has a handful of WIFIO moments. And don't freak out. And WIFIO stands for we're effed, it's over. Don't freak out. And always keep your emotions in check. Because when it comes to business, stocks, startups, etc., things are never as bad as they seem. And also things are never as good as they seem. Keeps you unemotional thinking that way. All right. Next up, Pallavi wrote, "Hey, Chris. Hey. I took your courses on the Complete Resume course, and so far I'm really loving the course a lot. But the problem is, I'm just a fresher. I think that means freshman, and I don't have any work experience at all as well. Yeah, no, I understand. So what I recommend doing is in that course and in my MBA program, I teach you in more detail how to network on steroids. And I want you to network and meet people with a similar background as you. Maybe they went to the same school as you. I want you to leverage LinkedIn, and I want you to meet with people that work at great companies and bond with them. And I teach you exactly how in my MBA program, and then ask them if you could do a free unpaid internship. And a lot of times when you do that, they end up paying you anyway. Yeah. And if I told you you'd have to set up 20 meetings in order to get one and get an internship, would you do it? Of course you would. You got to do it. And actually, when I used to teach at universities during the evenings, at one of the universities I taught at the very beginning of the 10-week semester, I would tell every student, I would say to them, if I told all of you that if you did 10 informational meetings over the next 10 weeks, if you did that, you would be guaranteed to get the job of your dreams, would you do it? And all 70 hands would go up. I love big classes, it's fun. All 70 hands would go up. And on the final day of the semester, I would say, okay, how many people did 10 meetings? No hands go up. How many did 9? No hands go up. How many did 8? Maybe 1 or 2 hands would go up. And the students that had their hands up, those were always the ones that got the job of their dreams, and they were never the ones with the highest grades. So the bottom line is you've got to network aggressively. And the sooner we recognize that in our career, the better. Because when we're younger, we work really hard to get good grades, we keep our head down, and our parents are proud of us, we're proud of ourselves, whatever. And then what happens is you get into the real world and you start working. And you're working for other people and you keep your head down. You're working hard. You think you're going to get noticed. And you look around and you realize, oh my goodness, all these other people are getting promoted and raises, but not me. It's because they asked for a promotion or asked for a raise, or they asked people to mentor them, or they networked a lot. Asking will receive. It's prophetic. It's been true since the beginning of time. I don't care how young people are, old people are. You have to have multiple Yodas or mentors in your life. And people want to help you. All you got to do is ask. All right. Next up, Manas wrote, my mentor. Thank you. Tell me something why you don't post reels on Instagram. You post Instagram TVS. That's fine, but please do reels as well. 30-second clips. It can make you even bigger on Instagram. Yeah, thanks. I actually don't. I don't. My team takes care of it. I think they do a great job. So what we do is they take portions of this, little clips from my weeklies, whatever courses, and they throw it up there. Yeah, thanks. But I'll mention it to them during our next team meeting. Yeah. Okay. And we hardly ever have meetings. And I bought for Christine, my wife, for Christmas a couple of years ago, a cup. And on the mug it says, "I just attended a meeting that could have been an email." Yeah. All right. Next up, T wrote, "Good morning, Chris. Good morning. I'm a new student in your MBA program, and I'm very excited to get started. Thank you. I'm curious if you have invested in any of your students' businesses." I've not. I have a policy of not doing that. Yeah. It's a conflict of interest. But I have helped a ton of my students with their businesses, and I'll profile them sometimes on my weekly call. This was one of my students in my MBA program named Julian Popov. He's from Sofia, Bulgaria. He lives in Germany now, and he and his son Martin, he took my program and he made this product called Grizzy. It's pretty cool, man. It's neat, yeah. But I walk through walls for my students to humbly help them. Yeah. And when I used to serve on the boards of companies when I worked in venture capital, my goal was always to get the first call from the CEO if she or he had problems. And I always view myself as a board member or informal advisor to my students. I view myself as a prosthetic extension of the management team. I'm there to assist you. I'm there to humbly help if I can. I'm here to serve others. All right, my face is getting a bit shiny. Give me 1 second here. I'll show you guys what I use if you're curious. So there's bright lights, right? And when you're in the movie or television or cameras, whatever, your face shines. So I have this stuff here. Christine got me this from Sapporo. You just brush it on and it's not really beige. You can't see any color, but it just gets rid of the shine. And I use 8 million of these things just for my massive nose. Yeah. All right. Not shining anymore? We're good? I think we're good. All right, we're fine. Let me get a little bit of water, read the next question. Thank you. All right. Next question is from Manas in India. Who wrote, my mentor as of now, I'm getting a lot of collaboration requests, the grace of God and your support. Awesome. But I have a policy, and it's I will only support and promote things that I use and like myself. That's a promise, a commitment, because customer service always comes first. Yeah, definitely. And when I think of Amazon, I think of great customer service, and a company is only as good as its customer service. Now, when it comes to promoting products, if you want to do this on your channel, I recommend looking at Marques Brownlee. He's my favorite YouTuber. He does tech products. And when he does promotions, right, he does his research on the product and he uses it himself. And so I actually bought something that he recommended, which is a VPN, because I respect him. It's called ExpressVPN. It's like $8 a month. It'll go on all your devices at the same time. Yeah. And I used it when I was in Rwanda in my hotel room, so I could watch the All-Star game. Oh my God! This afternoon, we've got the New York Yankees are playing Chicago White Sox in Iowa, on the right at the Field of Dreams. You know that movie, right? They're actually using the same land. So it starts today at, I think, on Fox at 3 p.m. my time. Yeah, I'm definitely gonna watch it after my one-on-ones. All right, and then Manas wrote, how many followers do you have on TikTok? I hope you've crossed 100,000. I don't even know. My son Andrew, he started a TikTok channel recently. I don't even know the address. I've never looked at it. I'm clueless. I have no idea. Yeah, but it's something I'll never dedicate much time to, because I do everything through YouTube, and then it basically populates all the different social media channels. Yeah. All right, and then Chibuez wrote here, That's all the world's water in your bottle, Chris. It's big, man. It's massive. It helps me, though. It helps me, yeah. And if I mispronounce anybody's name, please let me know. Thank you. Yeah, and I'm sorry if I do. Next up, Ali wrote, Chris, when you pause to drink water, I also do likewise. So much fun. Or when I pause. Oh, thank you. No, I appreciate it. Yeah. And I have great students in my MBA program that will always tell me, are you drinking water? Are you drinking water? Like Christina Hung, who's one of my platinum students. And she was on television, actually, with her husband, Christian, who's also in the program, and their daughter, Isabella, yesterday on CBS. Yeah, local San Francisco channel. 2 days ago. Because they just opened up schools here. Okay. Next up, Manas wrote, do you think Google has stopped growing? I don't think so. And you wrote, I guess the valuation has been around $1.7 trillion for a while. It's not growing as it should have. Your thoughts on this? Yeah, I mean, it's got a massive market cap. They are still growing. You know, YouTube is the second biggest search engine in the world. I think what's going to happen is the Department of Justice is going to break the company up, which should kind of keep the market cap in check. You can't own the largest two search engines in the world and not be broken up. I think the United States government is kind of waiting a little bit longer than they should, partially because they want to break up all big tech companies at the same time, which doesn't make sense to me. Also, Google has been a great promoter of freedom of speech, and I certainly respect the co-founder, Sergey Brin, a lot. He was born in Russia, and he made Google pull out of China about 10 years ago because of freedom of speech issues. So I think that's kind of helped Google from a government policy perspective to not get broken up yet. But it's so obvious it should get broken up. I mean, you can't own the two biggest search engines in the world and not be broken up. It's just a matter of time. Yeah. And they know that too. And I think that's one of the reasons they rebranded themselves as Alphabet, because Alphabet's going to become a holding company after a while. YouTube will go public, et cetera. Yeah. All right. Next up, Akshay wrote here, hey, Chris, do you think the government will ban Bitcoin and release a centralized cryptocurrency which they could regulate? Yes, but only in China. And thanks for everything you offer on YouTube for free for people interested. Thank you. I appreciate it. Yeah, yeah. If you want, you can go to my website, HarounEducation.com, and at the top you can search on any keyword. And I've done over 10,000 Q&As now over the past couple of years. Do a search on China. I've written a lot about this. When it comes to United States government, they won't ban it. They will regulate cryptos, which I talked about at the beginning of today's session. Thank you. Okay. And then Manas wrote, have you ever watched Dragon's Den? It's like Shark Tank of the UK. It's more tougher than Shark Tank and certainly a more serious show. I've not. Yeah. And I can't stand it when I watch those cooking shows and certain chefs with a British accent will ridicule these poor people that are pouring their hearts out to the public. Yeah. All right. Ali said, Chris, I recently got a job. Congratulations. As a business development services consultant, what material can help me excel at my job? Yeah. Business development. Yeah. So business development is a very broad term, which means you're looking for new ways for the company to sell their products, kind of like pre-sales. What I would recommend is just to network like crazy, which I teach about in my MBA program in a lot of detail. Find people that are similar to you that work in the same sector, have a lot more experience, and just grab a coffee or tea with them or do a Zoom call. Ask and you'll receive. People want to help you. All you got to do is ask. Yeah. And that goes for everybody. Set up a ton of networking meetings all the time. I promise you it works. I promise you. Yeah. Oh, you get my complete job course for free. For anybody looking for a job, just go to my website and then type in complete job. Let me show you how to get it for free. Yeah, I want to help humbly. Okay. So if you go to my website here, and then you go to complete job, all lowercase, you'll be able to get my my complete job course for free. Whew. I thought it wasn't going to work for a second, but we're good. Get it here for free if you want. Yeah. All right. All right. Next question is, Flaming Cold Gamers wrote, what's the topic on today's webcast? Yeah, so every week what I do is the first half hour or so, sometimes 40 minutes, I'll talk about 7 topics that I humbly believe will help my students either number 1, make more money through investing, or number 2, take their career to the next level. Yeah, and if you're on my email list, you'll a couple days before I send out the list of topics. Yeah, and if you want to get on my email list, go to my website, scroll down, and then just get the sign up to get my book for free, and I'll add you to the email list. And you can always unsubscribe. All right, give me 1 second, guys. Sorry. All right, next up, Lucas said, how many liters are in this jar? Like 4 liters or something. I'm not sure. Not sure. My secret is I actually don't finish it when I'm not teaching live as often, because my students put pressure on me to finish it. Yeah. All right. Hey, Rediana, how are you? Rediana's in my MBA program. She's great. She's based in Detroit. Samir wrote, that was an outstanding webcast. Thank you. I appreciate that. Thank you. Thank you. Creating those 7 topics every week is fun. The challenge is always to come up with new material to humbly teach my students on how to make more money or take their career to the next level. And by using real life practical examples based on the news, it's more fun and engaging this way. Plus, I want to push the goalpost out and always teach in different ways. Okay, next up, King of Dreams. That's awesome. King of Dreams wrote, have you looked into STEM tech stock? No. I've not looked at that one in particular, sorry. Yeah. I'm saying no because there's a company I invested in that got purchased called STEM Centrics years ago. Peter Thiel led the A round, and firm I was at, we led another round as well. Yeah, it's a nice exit. Next up, Flaming Cold Gamers wrote, what are your thoughts on the new cryptocurrency Pi? Yeah, I don't know. I have not done any research on it. If you want to learn about how to do research on a crypto, similar to how investment bankers do research on an IPO before it goes public, you can check out my cryptocurrency course. Or take my MBA program where I have a much more up-to-date version of this stuff. Yeah. Okay. Guillermo said, this is awesome. You're a gem. Thank you. God bless you. I appreciate it. Thank you. All right, next up, we got Reza, who wrote here, should we wait to buy Bitcoin now, or better to wait for regulations to get in place first and then buy it? Yeah. So I always, it's the best time to buy it, in my humble opinion, is when people are freaking out. Right? When it feels so wrong to buy, then that's the right time to buy. I know it's a weird thing to say, but as Warren Buffett said, you got to be greedy when others are fearful, and fearful when others are greedy. Right? Go against the grain always. In all of business, not just stocks, but if you're a contrarian, you'll do incredibly well in business. And quite often, an entrepreneur that wants to put a dent in the universe, starts their company, and people at first think, oh my God, you're crazy. Then after a while, you get some success, and they say, oh, you're crazy genius. And then after a while, you're just a genius. But along that path, you got to tell yourself, I don't give a damn what people think of me. Yeah. And that's a way of being a contrarian as well, because people think you're crazy. And when they say you're crazy, it just means you're thinking differently, which was the subject of and the crux of Apple's marketing campaign, think different. Yeah. Okay, give me 1 second. There's a monitor down here. I've got a couple of monitors. This one's flashing on and off, driving me nutty. Let me just unplug it. Sorry, 1 second. All right. And it's one of those monitors where I can write on it, which I'm using for my options course. Okay. All right, all fixed. Thanks for your patience. All right, next up, Akshay wrote, hey, Chris, and the stock market is going up and up still as COVID cases are rising. Are we in a stock market bubble, which is going to pop soon? And what are the indications that a bubble is ongoing? Yeah, it's a great question. Great question. So I worked at one of the biggest hedge funds in the world years ago called Pequot. And the founder of the company, God bless me, just passed away, Art Sandberg. And I remember in 2006, I was pitching to him. He came out to the Bay Area here to visit. We had a West Coast office. I was pitching to him. A bunch of us were housing home builder shorts. I was saying we have to short Lennar, ticker LEN, and KBH Homes as well. And he says, what's your thesis? And I said, well, valuation's egregious, and we know we're in the midst of a real estate bubble, like everybody knows. And he stopped me and my friend very politely, and he said this, son, I've been around long enough to understand to never stand in the way of insanity. Markets peak, markets find a floor. You just can't time it. You just can't time it. And so in the hedge fund industry, we waited until the market started cracking a bit, and then we piled on the shorts. But you just can't time these things. Otherwise, what happens is you'll get fooled by randomness, which is a great book by Nicholas Taleb as well. Yeah. So in terms of what's going on in the markets right now, so the government's in a tough position, right? Like inflation is a problem. However, COVID's a bigger problem. And we don't know, we don't know. And at the beginning of today's webcast, I showed you how to mine Google data and Google Cloud to see COVID cases announced in different regions in almost real time. And the government is privy and has access to much more information than we do, of course. And they want to put on a brave face, which is what, governments want to do. In Canada, it's all about POG, which is peace, order, and good government. They don't want us to freak out. However, there's a reason why the government in the United States is mandating that in a lot of government departments you have to get the vaccine. It's because they see the data. And the Federal Reserve has two choices. Number one, they can raise rates now to fight inflation or wait. If they're too early and they raise rates too early and it hurts the economy, and then the next variant of Delta called Lambda and others are much more severe, we're screwed. It's hard to reverse that. And so it makes sense to wait just a little bit longer. What's the worst thing that can happen? A little bit more inflation, right? That's not too bad relative to mass chaos and deaths and panicking and all that stuff. And the government's out of bullets. Like usually what governments do, the medicine that the government has in many countries to fix the economy is they have fiscal policy and monetary policy. Monetary policy is the policy of money, meaning cutting interest rates. Well, there's no bullets left in that chamber. It's done. You can't cut rates anymore. And when it comes to fiscal policy, they're trying, but there's not much more they can spend without, making this obsolete. This is fake money. Yeah. So by keeping rates at zero or close to zero for a little bit longer than expected, yeah, sure, we get some inflation, but we have to know what the hell is happening with COVID first. Yeah. And by keeping rates at basically zero, the government basically is telling everybody, hey, buy stocks and risky investments, because if you keep your money in the bank or buy government bonds, you're going to make hardly any money. And the opposite of this was in 1980, the Federal Reserve chairperson at the time, God bless him, was Paul Volcker. And what Paul Volcker did was, because inflation was brutal then and way worse than it is today, what he did was he raised interest rates to about 20%. And that was catastrophic, but it fought inflation. He had to do it at the time, otherwise you don't have an economy. And when rates are high, people leave their money in the bank, obviously, because you make 20%, or they buy low-risk government treasuries. And when rates are high, people don't buy stocks, because if I told you you're guaranteed to get 20% in the bank with no risk, why would you buy stocks? And so the opposite is happening now. Rates are basically zero, and there's no reason to keep your money in the bank, so people are getting loans actually to invest and start companies and all that stuff, yeah, or overextend themselves. Yeah. All right. In terms of knowing when the market is peaked, we just don't know. I mean, you can look at certain moving averages like the 50 and 200 day, and when I used to work on a trading floor, we looked at what's called the golden cross, which is when the 200 day passes down through the 50 day moving average. There's a lot of indicators you can look at. Yeah. All right, Fred, how are you? Fred Mendoza is one of my amazing MBA students. I'm glad you're feeling much better and you're back to work as well, brother. Always great chatting with you. Fred knows a lot about stocks, technical analysis. I always learn when I talk to him. He's got a guru that coaches him, who runs circles around me, and Fred's helping me with my options course too. Good to see you, Fred. All right, Peyton, how are you? Peyton's another one of my awesome MBA students. Peyton is in the U.S. Navy. He lives in San Diego, although he and his wife might be moving eventually back to Tulsa, where she's from. He's a great guy. He's got a great YouTube channel. He started it recently, and he just passed a milestone of 300 subscribers, and I think it's great. And I think everybody has got to subscribe to your channel. You inspire me so much, brother. I'm looking forward to talking to you today at 3:30 p.m., and then I'll go and watch the baseball game at Field of Dreams after that. Yeah, it's pre-recorded anyway. Yeah. And Peyton wrote here, you are the man. Oh, thank you, man. If you're on the fence for taking his MBA or his courses, please reach out to me. I strongly endorse this man and what he teaches. God bless you. Thank you. I'm a better man now because of his impact on me. Thank you, Peyton. God bless you, man. God bless you. Your family, I love you, man. Thank you. Thank you. Thank you. Also, Chris, how do I get my money back? No, I'm just kidding. I'm joking. Okay, and Amarnath said sales Hanson with Excel was awesome. Yeah, I'm so sorry. I don't know what that means. Let me know what that means, please. Yeah, because I want to humbly answer the question properly. Thanks. All right. Oh, and I'm working on another course as well. That's going to come out. It's called the Complete Excel course with no coding. It's going to be fun. No VBA, but you'll love what you can do with it. So I love, dude, when I use Excel, I feel like like I'm an artist, like Bob Ross with bad hair as well. Bad hair dye. I know. But Bob Ross, he's a painter. I feel like Excel is my palette, and I just love using it. It's just fun for me. And actually, for me, when I was a kid, they thought I had a learning disability, and so the school I went to, they wanted to fail me in the 6th grade and the 8th grade, and then they took me to this learning disability center in Oakville, Ontario, on Lakeshore Road, a place called Chisholm, and they found out I don't have a learning disability. I'm just not passionate about what I'm doing. And so in the 8th grade or 9th grade, my dad bought this for the house, which I still have. I love you, Dad, if you're watching. Those are my stickers from Blue Jays. And this changed my life because I found that I actually enjoy doing some homework if I can use a computer and create with it. Yeah, so, yeah. All right. Next up, Ali wrote here, hey, Chris, when you update a course on Udemy or Haroun Ventures, how can we know about the updates? Yeah. So if actually, I don't even know. Like on Udemy, I update stuff every now and then. But when it comes to the MBA program, I email all students. So I've got a massive update. I'm adding 20 to 30 hours every single year to the MBA program. And if you've already purchased it or will purchase it, you get access to all that stuff for free. And I'll send out a massive email. I'll send out an email to all the gazillions of people that have signed up for the MBA program. You'll find out. I'll also announce it on the air here. And so what I'm doing this year is in class number 89, I'm adding 30 hours of additional content, okay? But these are all electives, okay? You don't have to take it. It's all optional. And I'm adding a lot of stuff about advanced finance analysis this year, options, etc. And then eventually I'll add a lot more on real estate. I'll add a negotiations portion to it as well because students have asked for it, etc. Yeah. It'll always be up to date. Yeah. And if there's some new skill that everybody's asking for, some new social media product that hasn't been invented yet, but everybody asks about it a couple of years from now, then I'll add that to the curriculum as well. The curriculum will always be up to date, always. And it's just over 300 hours now for the on-demand $999 version. But it's going to be thousands of hours by the time I'm done with it. Yeah. But if the new stuff I add are just electives. Yeah. Think of it as a DLC that's free. Okay, next up, Anurag said, Dear beloved mentor, any plans for a trip to India? Dude, I would love to go again. I would love to go. And I finally took out my kids and Christine, my wife, to try dosa at I think it's called Reza, is the name of the restaurant here in Burlingame, California. And for those of you who haven't tried dosa, you don't know what good food is until you try it. It's like the first time you eat a Krispy Kreme donut fresh out of the oven. But dosa is 10 times better. And my favorite restaurant in India, and you're going to laugh at me, is when I went to Mumbai, in Delhi, in the airport, it was Punjabi Grill. Airport food. I loved it, dude. The dosa. It's the best food ever. Yeah. I would love to come. I will come within a few years for sure. For sure. Yeah. Maybe on my next trip to Rwanda, I might just stop by. Not that it's around the corner, but I'll do that. That's what I'll do. There you go. I said I have to do it now. My next trip to Rwanda, which is next year, I'll come to India. I'm coming to India next year. And then if you take me out for good Indian food, when the bill comes, I'm going to go, I have alligator hands. I can't find my wallet. No, it's on me, of course. All right, David Yerman. How are you, David? David, who's one of my MBA students, said, "Hey Chris, just checking in. I'm not staying. Okay, that's cool. I'm doing FA 1433. What that means is there's 4 semesters in the MBA program. He's taken the finance and accounting lesson from the first semester, the 4th class, and he's on topic 3. He said, I'm now creating Cowbell's cash flow statement. This is going great. I'm in over my head and I love it. Got to go hard. I'm at 14% finished. Awesome. And Cowbell is, so I try to make it fun and engaging. And Will Ferrell on Saturday Night Live years ago, there's this skit where he's playing a cowbell and it's hysterical. And so what I did was I bought some cowbells and I made a pretend company in that lesson in semester 1, class 4, topic 3, where we create the financial statements for the cowbell company. Yeah. It's fun. Thank you. Okay. Next up, I've got Baybits. First time I've seen you on the call. I hope you join us again. Thank you. Who wrote here, please recommend good books to read, either financial, self-development, or technical. Yeah. So I would say that the number one personal growth book that everybody needs to read no matter what is How to Win Friends and Influence People. It's by Dale Carnegie. It was written in the 1930s. It's been updated a few times. It's an oldie but a goodie. And without that book, people like Tony Robbins wouldn't be nearly as successful as they are. You know, Tony's great. I met him. He'd find other ways to be successful. But the entire personal growth industry is basically invented by Dale Carnegie. So check out that book. Also check out Dale Carnegie's book called, How to Stop Worrying and Start Living. And he teaches you to live in day-tight compartments, meaning each day, one day at a time. You can't control the past, and a lot of the future you can't control either. You got to stop and smell the roses along the way. Yeah. All right, this is my kill shake. Okay. In terms of other books to recommend reading, financial, I can't really recommend anything because every single finance book is just theoretical crap. Same thing with economics textbooks. You know, I love to teach based on real life case studies in my experience. If you want to read a finance book, what you can do is this. So I used to work at a big hedge fund called Citadel, and I was in Chicago at the mothership of the headquarters, and I visited with Ken Griffin, who's the founder of the company. And he's a billionaire, and I think he's going to be the richest dude in the world one day. And so I was in his office, and like I always do, I always look to see what's on the bookshelf of successful people. And he had a bunch of, and we talked for half an hour about video games and coding and stuff. He's cool. And finance too, of course. But he had a bunch of books from this guy named Damodaran. Okay, and Damodaran is a rock star professor at NYU that teaches about finance. You might want to check out some of those. Yeah. In terms of other books to read or listen to, anything Gary Vaynerchuk writes will help you from a personal growth and self-promotion perspective. Also, Tony Robbins, I mentioned. Just be a voracious reader of biographies. Now, last week I did a profile on Reese Witherspoon. And Reese Witherspoon, yes, she's a great actress, producer, etc. But she just sold her company called Hello Sunshine, which she founded 5 years ago. She just sold it for close to $1 billion to BlackRock. And she's so successful and multidimensional. And you know, people ask her, why are you so successful? How do you do it? And she said, well, I'm a voracious reader of business books. And so why reinvent the wheel? You know, we can subscribe to Audible if we want to and listen to biographies or autobiographies from our favorite entrepreneurs. They've already made it. They want to share their knowledge with us. So I would be a voracious reader or a listener to any autobiography of any person that you admire. And listen for their secrets, because they do share their secrets of their success in their biographies. Yeah. All right. Next up, Lucas wrote, being a 40-year-old, to be 40 again. Being a 40-year-old and doing a free internship would be like the movie The Intern with De Niro. Yeah. You can still do it, man. It doesn't matter how old you are. You can always reinvent yourself. Always. And it just jumped on me, so I'm doing a search on Intern and De Niro. Here we go, I found it. Okay, good. YouTube does that sometimes, yeah. Yeah. You can reinvent yourself. And think about this. Okay, so Colonel Sanders, who started KFC, and I saw KFC in Rwanda, actually. It was pretty funny. No McDonald's, they had a KFC there. But Colonel Sanders, he started KFC in the 1950s when he was like 65. And back then, that's like being 8 million years old. And the average life expectancy since the 1950s has gone up by 26 years. So although you're 40, you're actually 24. You can start over. We can all do it. And I just finished Obama's biography. I didn't vote for Obama, but I respect him. And in the biography that I listened to, the autobiography, actually, he read the whole thing on Audible. It was great. You learn about public speaking because the way he speaks, he's very eloquent. But in his book, he mentioned that, and he says this. He says, I was 38 years old. No, he said this. I was 38 years old. I was a failed politician. And my marriage was about to end. And then he reinvented himself at about the same age as you. Okay. I hope I didn't butcher that Obama impersonation. Yeah. All right. Next up, NRAG wrote, Dear Chris, with half the year gone, where are you on your goal for packing on muscle? It's getting better. I have put on a bunch, not enough yet. I injured my shoulder earlier this year. You know, I lifted almost as much as I did, 2 plates when I was 19. My record, I think I did 225 when I was 19 years old. I'm doing it with my son in the garage. I really hurt my shoulder, so I'll have to put off my Olympic plans for later. But it's almost completely healed now. I will get there. Yeah. And I'm wearing a suit, so you can't see how small I am. All right. Demian, how are you? Demian wrote, Dear Chris, good morning. Hope you're well. Like any giving, amazing Thursday, I enjoy and learning from the best. Thank you. A big hug from Barcelona. Many thanks for your work. Thank you. God bless you and your family. And sorry to hear about Messi. That's crazy, eh? Yeah. Apparently he wanted to stay for only a couple $1 million, but yeah, he's going to Paris. Messi in Paris doesn't make sense. It just doesn't go well together. Yeah. All right, next up, Ali wrote, is the content in your free complete job course the same as the one on sale? Oh, yeah, don't buy the complete job course on my website because today I'm giving it for free. Yeah. All right. Manas wrote, thank you for everything. God bless you and your family forever. Stay hungry, stay foolish. Great quote from Steve Jobs. Thank you, and God bless you more. Okay. All right. And next up, I've got Samir, who wrote, what do you think of buying AMD's stock? Already, most cloud providers are switching from AMD to Intel, and this should increase after the current shortage. Yeah, so I'm not too close to it. I do believe that AMD. We talked earlier today about Apple's acquisition of Beats and how it was a brilliant acquisition. But AMD, I think the smartest thing they ever did was they bought my beloved Canadian ATI. And ATI was the second best graphics company in the world after NVIDIA, right? And so they have a lot of great SoCs or system on a chip products. My kids always rave about the Ryzen AMD product, but I haven't looked at the valuation lately. Yeah. I know that it's smaller than all of Apple's AirPods business, which I talked about earlier today. Yeah. All right. And I was on the board with the former CEO who's based in Texas for years. Yeah. A different board. Yeah. All right. Next up, Stanley wrote here, hey, Chris, what is your opinion on covered call ETFs like QYLD? It has a pretty high dividend yield and a very average cost for an ETF. Yeah. So I got to look at that. Yeah. I have bought some derivative products over the years. I shorted I bought a covered call position on the XLF, the finance index years ago during the fall of 08. I remember that. Let's go there together. Okay. So let me go to finance.yahoo.com and I will type in QYLD. I can't remember that one. QYLD. I know a lot of tickers, but I can't remember that one. If I can type it right. QYLD. Here we go. Covered call ETF. You can read up on this one. And this will be a great way for us to do research too. So before you look at any ETF, the first thing you got to do is number one, look at the fee. If it's less than 0.5% per year, meaning for every $100 you put in, you pay less than 50 cents. That's usually a decent fee. Also, we look at the volume. Does it trade enough? So let's look at the volume first. So this trades 2.5 million shares per day times $23. So it's certainly liquid enough. You always want to make sure that any investment you buy trades 10 times more than the amount you want to buy, so you can get out if you need to. In terms of the profile, I'm going to look here at the management fee. The expense ratio, same thing. It's a little bit high, but it's still under 1%. Oh, it's because of options. That's right. There's lots of hidden fees and stuff with options, calls. And let's look here at the holdings. All right, so covered call. I guess it's another way of getting beta exposure or long exposure to the NASDAQ. Yeah. I really haven't done much research on this. I usually just buy the Qs, right? So, which is the tech stocks in the NASDAQ, right? So I've looked at this more closely in that. Yeah. But in my my complete options course, I will be teaching you close to 50 different option strategies as well. Okay, from scratch, and there's going to be a beginner track and a genius track as well. Right, and so I'll teach you what calls are, puts are. I'll also teach you, how to do straddles, strangles, married puts, tons of things. Iron condors, you'll love it. It'll be fun. Yeah. Or your money back. All right, next up, Ajay wrote, my mom cooks the best dosa. Awesome. Next year, when you visit India, the treat is on me. Thank you. I appreciate that, brother. Thank you. Very cool. Very cool. I love dosa. It's so good. It's the one carb I'll just eat like crazy. I don't care. It's just too good. Okay. Ali wrote, we also have KFC all over Zambia, but zero McDonald's. That's interesting. McDonald's is like the American embassy. It's like everywhere. I was in Tiananmen Square years ago, and I remember seeing the McDonald's logo in the distance. Yeah. And I've gone to so many McDonald's all over the world. And I do it because I love to see the different products in each country. So when I was in Thailand, for like 10 cents, you can get rice balls at McDonald's. The best chicken I ever ate in my life, best chicken wings ever, is at McDonald's in Kowloon. If you're in the Hong Kong area, the chicken wings there are off the charts. I wish they had them here in America, but they don't. Yeah. All right, Michael, how are you? Michael is the Aqua Hood. Good to see you, brother. Michael is from the United Kingdom. He grew up with Sacha Baron Cohen, who he told me is very generous as well. Good to see you, brother. Next up, we got Anurag, who said, sure, Chris, we'd love to welcome you to India with an open heart. Thank you. You would love the hospitality. In our culture, a mentor or guru is regarded above all. I'd love to come. I'd love to come. Absolutely, yeah. Yeah, and I listen to a lot of George Harrison's music. George Harrison, of course, is one of the Beatles, especially the influence of the sitar in Indian music as well. And he just re-released his triple album, the best-selling album from 1970 or so, called All Things Must Pass. And there's a version of it you can get that's $1,000. It's crazy, but it comes in a wooden crate, right? And there's a wooden bookmark in it, in that crate. In the LP version, which is from a tree on his property that got struck by lightning. Yeah. All right, and Michael wrote, what month will the options course come out, Chris? I'm not sure yet. I'm not sure. Maybe October or something. Yeah, it's definitely going to be in the fall. In the fall. Yeah. I'm having a blast doing it. Blast. It's fun. Yeah, but it's really challenging for me because it's something that's never been taught in an intuitive and fun way. And there's a lot of steps to it. So I've got more props than I've ever used before. So I'm teaching it like the building bricks. Okay, so we learn one concept. Okay, then we're gonna pile on another concept and another concept, and they're color coded on purpose, and you'll find out why. And then eventually you're like, oh my God, I'm like Ed Sheeran. I built a Lego house. You know what I mean? So there's the Lego Death Star, whatever. So I've got a lot of props. I'm trying to make a complicated topic fun instead of very boring. Yeah. All right. Okay. And then And Michael said, sorry, I know you were asked about it. I forgot. Yeah. Oh, yeah. This fall. Thank you. Yeah. Cool. All right. And if anybody has more questions, please type them now. Otherwise, I'll wrap up the call in a minute. And in a second, what I'm going to do is I'm going to tell you how you can win the $909 MBA today. Okay. Tell you in a minute. All right. So Lucas wrote, and if I miss anybody's question, post it again. Lucas wrote, oh my God, I didn't know I'm so young. 20-year-old ladies, I'm on my way. Dude, it's all up here. Always. And I remember I had a great friend of mine, Dave, who he's a portfolio manager here at Fuller and Taylor. We went to undergrad together in McGill and worked at Goldman together. And he always had the most gorgeous girlfriends. Always. And the reason was because he was so full of confidence. And his girlfriends were brilliant. They were funny. But he didn't mind getting rejected. For me, I'd ask a couple people out and then I'd get shy. Yeah. Confidence is king. I think, therefore I am, like the Rodin sculpture. Yeah. And your age is whatever you think it is. Okay. All right. Next up, Sarthik wrote, hey, Chris, I'm an undergrad from India, and I want to connect and network with people from the United States. Since I'm looking forward to doing a master's there. Any tips? Thank you. God bless you and your family. I appreciate that. Thank you. Well, I recommend, so check out my complete job course, which is free today, because I do teach you a little bit about networking there. I teach you more about it in my MBA program. But I think what you can do is you can find people that have followed a similar path to you and are currently living your perfect life today. And they're usually 20 years older than you. And you reach out to them and ask them for a Zoom meeting or a coffee, tea, whatever it is. And you will get these meetings, I promise you. You just got to try, because nobody tries, especially over Zoom. Like, my students are getting tons of networking meetings using Zoom because nobody else is asking. And so the way to do it is this. So think about it this way. Think about, Lucas, 20, or actually, who asked the question? Sarthik, sorry. Sarthik said, think about it this way, 20 years in the future, you're 20 years more successful than you already are today. And it's 20 years in the future, and this younger version of you reaches out to you. This person went to the same school as you, maybe they're from the same hometown, and they ask you for a quick Zoom call or a tea or coffee meeting. Would you take that meeting? Of course you would. You just have to ask over and over and over again. Yeah. And if anybody watching lives in a certain country and they want to move to another country, but they don't know how to do it, here's how you do it. In your country, get a job at a company whose headquarters are in the country you want to move to. And work your tail off to do exceptionally well. Work really hard. And usually what happens is you reach a point in your career that you can't climb the corporate ladder anymore where you are. But if you're money and you work hard, they transfer you to the mothership and they get you a visa and everything as well. Yeah. All right. Next up, Zishan said, sir, I'm waiting for your MBA degree price to come down so I can enroll. Yeah, thank you. And then Michael said, I'm really looking forward to the options course. Chris, thank you. Appreciate it. You'll love it. It's fun. Yeah. But the problem I'm having with it is I'm such a hypocrite sometimes, because I tell people about a minimum viable product and get your product out to market fast. And I'm trying to make it perfect, but the problem I'm having, and Salvador Dali, great painter, God bless him, he said, if you strive for perfection, you'll never reach it. But I can't fight myself on it. I just don't want to release a product until it's perfect. Otherwise, I end up like Microsoft with Windows, especially Vista, and maybe Windows 11, who knows. Yeah. Okay. All right. Ajay wrote, thanks a lot for introducing me with REITs. You're most welcome. And for those who are not familiar with REITs, it's a way to invest in real estate by buying a ticker. Okay. And so REITs, like if you ever wonder how the hell do people buy these where do they get the money for shopping malls and big office buildings? Well, there are some called REITs, which stands for Real Estate Investment Trust. And the law is, in most countries, to list as a stock that's a REIT, you have to give away 90% of your profit as dividends. And so you can find REITs for shopping malls, office buildings, whatever it is. Just go to Yahoo Finance. You can even just type up REITs and you'll find some REIT funds as well. So I've never looked at this one here. American Tower is a REIT, Crown Castle is as well. A lot of these companies have cell towers. It's a real estate play. So if we look at this one here, Alps Active REITs, no, the volume is not that high. 7,000 shares, no, not worth it. But if we look at the holdings here of this REIT, let's see what they are. All right. So it's 100% real estate, obviously. Okay, yeah, and this here is a data center, right? And a big company called Equinix. I visited their data centers here in the Bay Area. It's basically a big building with tons of air conditioning and computers. So Equinix is in this as well. It's a large percent of the assets. This is wrong here, whatever this states here. The data is wrong probably because it's very illiquid here. You can't have more than 100% assets in one thing. But you might want to check out Yahoo Finance when it comes to REITs. Maybe buy an ETF that's a REIT as well. But not this one because it's certainly not liquid. Yeah. As you can tell, I don't have too much experience with REITs. Yeah. All right. So Ajay said, thank you for introducing me to REITs. I asked you 2 months back about it, and I got my first dividend today from Embassy REIT. Thank you. It's a great investment opportunity. Awesome. And REITs have high dividend yields by law as well. Yeah, unless the price goes up too much. And if you ever see a company whose dividend is way too high, be careful. It might be high for a reason. You know, the company might have a lot of litigation issues, etc. Or it might be some kind of accounting investigation from the SEC. Yeah. All right, next up, Sarthik wrote, by the way, Chris, can you give a quick review of the top 10 cryptos in 2021 arranged at market value on the basis of your research? So I pride myself, I say with love in my heart, I pride myself on teaching my students how to fish instead of providing them with a fish. What I have said publicly before is I own 4 cryptos. I still do. And I haven't sold any of them, okay? And I've actually accumulated a lot more of them. Okay, they are as follows. Bitcoin, Litecoin, Ripple, Ethereum, Ether. And I'm currently, I moved the mining computer up to my son Dylan's room. He loves to, I don't know, the graphics card looks cool to him. But if you go to harouneducation.com/crypto, all lowercase, you can actually get access to the mining computer. It's right here, yeah. So it's currently running. Ooh, it's spiked high. Yeah. And basically the way it works is I'm mining as part of a pool. It's just more cost effective to do it this way. And I pay this company, Nanopool, 1% of whatever I make. And so I've got the cryptocurrency computer upstairs. It's running. It has this hash rate right here. This might be an overclocking. I'm not sure. He better not be overclocking. It's a fire issue. I don't think he is. And then this here is the balance. So far with this mining computer, we're at $427. Okay, it's 71% full. What that means is this: once you get to 0.2 of an ether, okay, which will be $600 or whatever it is, then what happens is the money that I've made from mining Ethereum will go directly into my Coinbase public key. Okay, and this is the public key I have on Coinbase for Ethereum. Or Ether, yeah. And this is the Haroun Ventures Miner, is what we call it. Yeah, anyway, it's kind of cool. All right. Let me see if there's any last questions here. All right, and Ali wrote here, if you already have the free complete job course, do you still need to get Build the Best Resume and LinkedIn Profile course? No. So my complete job course is free for a couple days. There's overlap. Don't bother. Yeah. But if you take my MBA degree program, I do tons of brand new stuff and teach you how to network based on network on steroids, that sort of thing. And you can go to learn.harounventures.com and sign up today for the MBA program. There's a 30-day 100% money back guarantee. You got nothing to lose and everything to gain. All right. So what I'm going to do right now, folks, is I'm going to ask you all a question. And whoever answers this question correctly wins my $999 MBA program for free. And it doesn't matter if I see 5 people answer at the exact same time. Whoever answers first, whatever I see come up first, is the person that gets it. Now, please don't answer the question I'm about to mention if you already have the MBA program. Okay, I want it to go to somebody new. Yeah. All right. And the question is always based on the contents of the first 7 topics I talk about in every week, the first half hour or so. This is me buying a lot of time to think of what frickin' question to ask. All right, so give me a second here to think about it. All right, and I want to make it business-like. I don't want it just to be where's French Laundry based or something. That's not the question. Give me a second. Okay. We did a case study today where we talked about buying versus building, and we talked about the amazing corporate strategy that a certain company had buying another company. What was the name of that company and who did they buy? I've got like a 10-second delay here, so. Yes, the winner is, drum roll, Sanyan. Sanyan, congratulations, you won. Of course, it was Apple buying Beats, which was the best tech acquisition that's been done since the 1980s when Microsoft bought MS-DOS for $50,000. Yeah, congratulations. So the winner is Sanyan. So Sanyan, what you can do is email support@harounventures.com. And what I'll do is I'll personally reply to that today or tomorrow and give you the free coupon to my MBA program, which you can learn more about at learn.harounventures.com. Yeah. All right. A lot of congratulations to you from your peers here globally. Great job. So I want to thank you for your time. This was a fun webcast. If you subscribe to my vlog, I'll see you every day at 9 a.m. Pacific time. That's when my vlogs drop. If not, if you can please just like it, it would help us out a lot as well. I usually don't ask for that, but please like it. Yeah. If you're getting value out of this only though. Yeah. If not, then do this. Yeah. Have a great weekend. God bless you. Stay safe, stay happy, stay healthy. And I'll see you next Thursday and every Thursday forever at 8 a.m. San Francisco time. Thank you, everybody, and God bless you. And I'll see you soon.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.